Good morning, everybody. Hope you had a great evening. We've got our first frost forecast for tonight. It's supposed to go down to 25 degrees. Normally, we kind of ease into them, like 33, 31, 34, 30, back and forth, and it takes a while. We don't really expect really cold weather until after Thanksgiving. But Reg and Sandy have shared some of that Canadian air with us. We're forecast to go down to 25 tonight. This will be the demise of a lot of bugs that need to go to sleep for the winter. Hey, big news overnight. The Bank of Japan moved. They have added more money to their current QE program. They have increased their purchases of stock market ETFs. They are redoing the percentage of securities holdings in the world's biggest retirement fund to emphasize more on equity. So the Bank of Japan's QE program increased. The Nikkei exploded, and the rest of the stock markets around the globe went with it. The Bank of Japan and the ECB are where the world will be looking for that extra money to support equities around the globe. There are some people that are grumbling about the penurious approach the ECB is taking so far, but when things get bad, things get tough, the ECB will step up and increase and do more, and our Fed will too. The Fed has said our economy is strong enough, QE3 is over, but we're going to do anything and everything that we have to do to support the economy, i.e. to keep the stock market high. So we can at least point to one piece of good news. So Bank of Japan stepped in and played. Indexes around the world made new contract highs. Financials suffered, and they are pointed lower this morning off of a new piece of news. Now, my guess is we are going to trade lower, but we're probably not going to break because of the risk associated with quantitative easing programs and what they do longer term. If you want to see the best case outcome, it's Argentina. And if you want to see the worst case outcome right now, it'd be Venezuela. Look what happened in Venezuela. There's a company that's rich and natural resources, was doing well. The economy was growing. Chavez comes in with really Marxist language, class warfare, soak the rich, same stuff that we get. And look what happens to them. They have to ration toilet paper. They're now employing 21st century technology, fingerprints, to make sure that you only buy or only get your allocation of consumables each month. And I mean, we all know the outcome. The issue is always when. The question of the ages. So again, my feeling is that we don't have, because an economic collapse like in the 30s, we just have gradual erosion of purchasing power, sometimes faster than normal, but the end is near. So if you want to understand how to protect your assets and how to live long-term and have a plan, look at how those that have had assets in Argentina have prospered since the 1930s. And that's owning real estate, probably being in the stock market, and gold. So that's where we find ourselves this morning. This morning we have personal income expected up 0.3. Not a market mover. The focus will be personal spending plus 0.1. They would like to see this number much higher than plus 0.1. Employment cost index. This one really it doesn't ring true. Plus 0.5% because of the stagnation in wages, and people are working long hours and getting paid the same. But it is forecast to be up by 0.5%. Chicago PMI at 60.5. And Michigan sentiment at 86.4. The market's focus, number one, is going to be the direction of the E-mini stock markets. It's the number one focus. Number two will be personal spending. Number three will be Chicago PMI. And number four will be Michigan sentiment. So I think the first trade is to sell to test this support level at 8. I'm going to try to buy it a little cheaper. I put 1 to 5 as buy 1, but that really might be 5 to 9. Put a question mark by 9. We do have this tail down here. We do have this rejection over here. The first sell is pretty aggressive, 15 to 19, leaning against this high volume number at 16 right there to test the 6 to 8 level. And if the 6 to 8 level holds, we can trade from the long side. Sell 2 will be 23 to 27. So news made the markets move big time overnight. It is the end of the month. There's very little incentive for money managers to get out there and bang on the market and really arrange things. They will do window dressing, so some stocks will be in a down rotation as the institutions dump them. Other stocks will be in an up rotation, and they should cancel each other out. Based on the action and the activity in the markets, the options markets overnight, people may be selling Treasury futures, but they're taking protection in the option market. And large players do that. Very large players are protected by their cash portfolios, and they trade around those cash portfolios or calls and options with futures contracts. The option market has really become probably the favorite way to hedge financial portfolios. Okay, looking at the 30-year, we have rejected prices basically below 24. So we'll be a little aggressive right here because the knob spread sold last night. We'll make 21.25 buy 1. Buy 2, 13 to 17. On the sell side, we're at the buck. Last rotate up was 8, so 3 to 7, pretty aggressive. Would like to get it done at 7. Sell 1. Look for a retest of 8, and if it holds, we can get short. And then 11 to 15 for sell 2. If the knob spread starts to expand or contract, our number 2 levels, because of the extra volatility in this contract, are better places to engage the market. But again, what changed overnight? The news. Wonder how the people, one of the things, the Japan's finance ministry has been on the same path since '92, and they've had stagflation. That's the best you could call it. And you just wonder why to me, it's really an act of desperation. It's kind of like, have you ever had just a real string of losers in your own personal account, and you are despondent, and now you're in another loser, and your account equity is quickly moving towards 0. A lot of people just throw up their hands and say, well, if I'm stopped out and I lose all my money, the game's over. But if the market somehow bails me out, I can play again. And I really feel that intellectually that's the way that Japan's finance ministers feel right now. We're on this course. We've set it up. We're going to see what happens, and we'll have to see how it plays out. But it's suicidal to my way of thinking. They have brought inflation back. They have cut the purchasing power of their economy. They have bankrupted lots and lots of small companies that don't have the borrowing capacity or the ability to export and get money from overseas. They've been very successful at that. And You see that in the United States. Small businesses suffering here because of the same policies. Okay, we've got resistance here at 75, 77. We got resistance at 80. So I think that usually we get about 50% retracement into these single prints right here. So 79s to 81s will be sell one. Then we're back to our 84, 86, which is where we thought the market was going. I see people in Japan and other countries, they're wanting to buy gold and protect themselves from inflation. We've rejected prices below 70, so the play is stops, below 65. So this will be buy one. We're going to put a question mark at 70. We bust 65, then the 60 area plus or minus. We're making new lows, as you can see right here. We've liked the short side of the gold market because large institutions aren't taking the long side. They're not buying physical gold anymore. And central banks sell it to show people that you can't protect you shouldn't be out there trying to protect yourself from inflation. Can't go counter the best minds in the world and protect yourself. So that's where the battles will be fought. Okay, the euro and the yen are off a bunch. The euro has not broken. The yen has because of Bank of Japan. So we have this support in the 50 area. So 40 to 50 is buy one. 20 to 30, buy two. Last rotate up stopped at basically in the 90 area. So 90 to 126 even is sell one. And then our 20 to 30 for sell two. There has been a lot of talk about how stingy the European Central Bank is on their first move. They need to do more. Germany is the holder of most of that paper, or the one that everybody's going to look to, the central bank, and they've got a lot of clout. And Germany certainly is guiding the current effort by the European Central Bank. But again, you can stimulate the stock market. You can make a lot of money for very, very large holders that have access to the money market, to the money markets, can borrow for themselves or take advantage of the 0.25%. If you look out there in the business world, prime's at 3 1/4. For most people out there, you're looking at on a business loan 6 1/4, 3% over prime. That's a hell of a spread for the banks that will actually make loans, but they aren't making loans to small businesses. There's so many restrictions and pressures put on these people by bank examiners. It's just easier to buy treasuries and forget about the rest of it. Okay, 81 is pretty good resistance. We're at 35. We've got the last rotate up in London was 75. So 50 to 75, it is aggressive as hell. And 81, 81 1/4. And this trade has to fill quickly on that first rotation up where it's too aggressive. You don't want it. Move it back up to 81 even. I think we are pointed lower. So we'll make 75 to 80, stops below 80, buy one. And then we'll play for new lows, 25 to 50 for buy two. And why is crude selling? Decreased demand around the globe and excess production. Is pretty simple. And no matter what happens and no matter what the twists and turns of the crude market are, and they are considerable and they are often, longer term it's headed lower because of worldwide economic softening and excess production. So puts are a pretty good play if you don't want the vagaries of twists and turns and you can't stand to see your equity jump up and down or fluctuate. I've told this story, and I'm working with another individual right now who's absolutely spot on his market direction calls. Can't handle trading futures. Couple of dollars fluctuation, winner or loser, should I get out? All this other stuff, and hopefully I've convinced this person to, based on how good their market calls are, why don't you buy puts and buy calls and forget about the rest of this, and or at least buy puts and calls and to trade, help you trade your futures with a little less angst and emotional issues associated with contract outrights. The nice thing about puts and calls is that you can't get out of them. You get whacked. You can't change your mind. You can't turn on a dime. That's the beauty of futures, and that's the good and the bad of futures. Okay, here we are. We've had an explosive rally up. It's based on news. Obviously, 2,000 is pretty damn good support. We're at 11 right now. Last rotate down's 8, so we may have a shot at stops below 8. So our first buy is 5 to 7. There'll be window dressing today, but no portfolio manager is going to look this gift horse in the mouth. It's okay to sell failure at 15 to 17. Really not too interested in the short side of the market. And then 19 to 21 will be sell too. This 2,000 area right here is probably our best support. First support is going to be at 8. So some profit taking is to be expected. Hopefully we can get in around 2,000. I put the 5 to 7 here because early in the session they make us pay up to get in. We've never been able to buy on the cheap. Not never, but almost. We're rarely able to buy on the cheap on the opening of the day session. We have to pay up. Later in the day we usually get our prices, but not on the opening. So this 2,000 area I think is really a good spot to try to initiate from, but 5 to 7 is going to be where we start out. And then the easiest trade to see is just failure to make new highs, failure to take that out. Can't take that out. Then day trade shorts and profit taking from the trading community, not from the swing trading community, will kick in, take the market back. Wouldn't it be interesting if we closed at all-time new contract highs? And if I'm a portfolio money manager out there, I would be pushing for that, wouldn't you? That's it. It'll take about 15 minutes to get everything up and posted. I'll be back as fast as I can. In the meantime, good trading.